The fourth quarter of 2022 managed to close out the year on an improved note. Within the equity markets, we saw gains in the fourth quarter from the lows early in October or in the mid-summer, depending on whether we're looking at the S&P 500 index, the TSX, or the MSCI EAFE index, which is a representation of international equities. This improvement, though, did not manage to leave a positive outcome for the full year, with equity markets still lower from where we started at the beginning of 2022. From the fixed income market perspective, here too we saw improvement in the fourth quarter as bond yields retreated from their highs, and we saw improvements in fixed income. As we head into 2023, we do have to be aware that we see increased economic headwinds or greater risk of recession both in Canada and the United States. With respect to the equity market specifically, the fourth quarter, again, was an improvement over what we saw in the third quarter. While equity markets seemed to hit a near-term low early October, we did see a rally from there to the end of the year. Despite this rally, equity markets did end up lower in the United States, in Canada, as well as international equity markets on the full year. But in particular, some of the themes that we've been highlighting in the prior quarters, that is, the opportunity set in the international equity markets, really started to play out, with the fourth quarter performance for international equities dramatically outperforming their US counterparts. The greatest focus in 2022 for investors has been with respect to inflation and interest rates. And here in the fourth quarter, it's been no different. However, we've seen a shift in the direction for both inflation and interest rates, which leads to optimism for the fixed income markets into 2023. The fourth quarter saw inflation fall in the United States and stabilize in Canada to modestly lower levels off their highs from mid-year, and that has resulted in bond yields falling from where they were also in the mid-year. This contributed to positive performance for bonds in the fourth quarter and leads to an improved outlook for fixed income overall as we head into 2023. Investors faced a number of challenges in 2022 with both falling equity and fixed income markets. And despite some of the economic headwinds that we see coming in 2023 with the prospect of a recession in Canada and the United States, we also have an environment with much better valuation with respect to equities and stable interest rates and falling inflation for the fixed income markets. So as we look ahead to next year, we do so with a certain level of optimism that will be a better year than the one just passed.